Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs and I'll talk about the general trade setup, which looks good at this point of time. Global markets are doing extremely well. The Japanese markets are up 1.5% and the SGX Nifty is indicating a gap up of almost 80 points at this point of time. Let's take a look at what happened with the ADRs. Most of the ADR, in fact, all the ADRs ended with a positive bias. The big moves coming in from Vedanta and Tata Motors, but across the board there was buying that happened in the ADR, so all the ADRs ended with a positive bias. The big jump came in yesterday in crude. Crude was up almost 2.5% overnight, and that continues in the morning run. So crude is up almost close to 1% on the WTI side, and Brent is trading up almost 0.5%, so close to the $65 barrel per mark. Now, overall, if you're looking at the close on the base metals on the LME, extremely positive close. Aluminium was up almost 2%. Copper, zinc was up almost 2.5%. Nickel moved up almost 5%. So strong traction that happened on the base metals, and the start from China has been very strong. Copper and zinc are up almost 1.5 to 3% to 1.5 to 2%. Steel is trading up almost 0.5%, but aluminium seems to be slightly weak. It's down almost 0.8%. The traction for gold, silver, platinum and palladium continues. As far as flows were concerned, yesterday both FIs and DIs were net sellers in the market. FIs sold in almost 730 crores, DIs sold in 150 crores. Overall, so with that, FIs are net sellers to the tune of 550-800 crores and DIs are net buyers to the tune of almost 6,600 crores at this point of time. Now, if you're looking at what happened with the Nifty was down almost 38 points, but there was traction that was seen on the mid-cap. Nifty mid-cap ended flat and the small cap was down in trade. The big cuts came in yesterday on the Nifty Bank and the Nifty PSU Bank, led by Punjab National Bank, which was down almost 10%. Now, as far as the markets are concerned, contribution was 38 points on the downside. You had Reliance, Bharti Airtel and the HDFC Twins, which helped the Nifty, but on the losing side it was basically the banks, ICICI, SBI and Axis Bank, which caused the drop. But Agam, what are the FNOQs indicating?
Well, we closed about the mark of 10,500, which can be considered as a positive for those who are long in the markets, because that is a technical as well as a psychological resistance level. That said, very little change with respect to the Nifty futures, but when it comes to the Nifty Bank futures, we did see more fresh shorts building in with our nearly 13% increase in OI. Moving in with respect to the India Volatility Index, as one might expect, we have seen a decline of around 4%, currently at a little above 17. The Nifty put call ratio remains unchanged, largely unchanged at around 1.08. What we've also seen is a change in terms of changes in open interest for a lot of these options. The most activity was around the 10,600 mark, where the 10,600 calls saw substantial amount of writing. We do have Oriental Bank of Commerce, which enters into the band, but we have a lot of movement in the likes of Repco Home Finance, and Repco Home Finance, of course, is not in the band. But PNB, of course, which saw a substantial amount of fresh shorts, and other than that, we're also looking at a lot of shorts in building up in Bank of India as well. So a lot of weakness in the PSU banking space, but we'll also be watching out for benchmarks and whether or not they can hold on to the mark of 10,500. That is the Nifty.
Stock of the day is Welspun Enterprises. Good set of numbers reported by the company with a market capitalization of around 2,500 odd crore. Revenue is a five-fold jump there, registered a five-fold jump there at a number of around 298 crore as compared to 54 crore that we've seen in the corresponding quarter. The company has reported net profit jump of nearly three-folds at a number of 15 crore as compared to, it's a five-fold jump at a 15 crore as compared to 3.5 crore that we've seen in the corresponding quarter. We've seen operational efficiency creeping in for this company at a number of 11.5 crore as compared to an operating loss of nearly 10 crore in the December quarter of the previous year. Margins though not comparable, but they've shot up. They've been in positive territory of 3.8% as compared to a contracted figure of 17.2% in the corresponding quarter. Higher revenue and the cost saving techniques adopted by the company has resulted into operational efficiency for the company. Raw material cost as a percent to your net sales has fallen significantly to 1% from 10%. Employee benefits expenses as a percent to your net sales have come down to 6% from nearly 15% that we've seen earlier. Also, other expenses have come down, has slid to 14% as compared to nearly 24% that we've seen earlier. Also, there has been an exceptional gain of around 4.4 crore in this quarter as compared to an exceptional loss of nearly 1.3 crore that we've seen in the corresponding quarter. These gains relate to the sale, in the sale of Welspun Energy. Also, bottom line has been aided by the gain that we've seen in other income, which is shot up by 37% on year-on-year basis for this company at a number of 25.4 crore. In terms of gross revenue breakup, you would see infrastructure business, the main business here, which has contributed to 80, which has registered a multifold jump at a number of around 300 odd crore. In terms of the EBIT breakup that we have, infra business has been doing well for this company. Trading has been divestment, and oil and gas business, the losses for that have actually widened for the company at 3.84 crore as compared to 3.22 crore. That said, let's go across to Jayesh for commodity market updates.
Thanks for that, Nikki. Let me start off with oil prices, which actually have extended their gains after posting the best day this year so far. So WTI and Brent surged more than 2.5% each overnight. Now, this was on the back of some positive inventory data that was released overnight. The crude oil inventory surged as much as 1.84 million barrels for last week, as per EIA, which was better than what we were anticipating. Also, we had gasoline inventory, which climbed as much as 3.6 million barrels for last week. Once again, this was also better than what the Bloomberg estimate had suggested. Moving on to the precious metal space and the base metal space, both of these have been aided by the weakness in the dollar. So gold has actually posted the best gain in over 11 months and has now climbed above the 1350 per ounce mark. The dollar index has been trading lower for the fourth consecutive session. The LME base metal index surged more than 2.5%, which is the most since 24th of Jan. US equities, the rally in US equities and the dollar weakness has aided to the growth. As far as individual base metals are concerned, nickel was up nearly 5%, which is the best performer. Zinc and copper surged more than 2.5% each. Aluminium was up nearly 2%, the most since 18th of Jan, while lead and tin closed marginally higher. But Saloni Dhanuka is here to take us through the currency market update.
Thanks for that, Jayesh. So both rupee and bond gained in trade yesterday on the back of better than expected key macroeconomic data. In terms of rupee, it extended gains for the second consecutive session and it ended 23 paise higher at 64.09 levels against the dollar. Now the home currency ended 0.4% higher against the dollar, the most in nearly 2 months. Speaking of the bond market, sovereign bonds dropped yesterday as yield on the new 10-year benchmark security ended steady at 7.49%. Speaking of the dollar, it ended lower for the third consecutive session yesterday. Despite better than expected US CPI data, the consumer price inflation grew at 0.5% in January as compared to a forecast of a growth of 0.3%. While the dollar initially gained on this news, however, reversed all the gains to trade lower against most of its G10 peers by the end of the trade. And speaking of the dollar index, now it is trading below the crucial 89 mark in the early Asian hours. Speaking of other currencies, dollar extended losses against the yen and it has hit a fresh 15-month low of 106.72 levels. Well, speaking of euro and pound, both extended gains and over 1% against the dollar. Coming back home, dollar rupee is trading at 64.04 levels in the non-deliverable forward market, which indicates a positive opening for Indian rupee in today's trade.
Well, among the stocks that we're tracking today are MT Educare and Z-Learn. Now, Z-Learn will acquire stake in MT Educare. In fact, they've said that they will buy 31.96 million shares of MT Educare at a price of 62.57, and they will additionally make an offer for another 26% stake. Now, MT Educare has been locked at the 5% upper circuit for the last 4 or 5 sessions. So let's see how that one reacts today. But big news for that stock. Watch out for that one. That apart, we're also looking out for Indiabulls Real Estate. Now, the company said they will finalize options for the sale of their residential and commercial assets at Chennai, which they believe is a non-core market for the company. They've additionally also said that they aim to induct third-party investor in the commercial leasing business by 31st March. So you could see some developments coming in on that front in the next few days. Torrent Power is another one which we're looking out for. They have signed a pact with Siemens Gamesa for setting up a 120 megawatt wind power project. Additionally, they've also said that they've emerged as the bidder under the e-reverse auction for wind power projects. So what are for that company? Infibeam is another one that we are tracking. The company said that, or they have approved Network 18 strategic investment, and Network 18 will subscribe to preferential warrants of Infibeam for a total amount of 40 crores. Now that will be at a price of 186.91 per equity share. That's the conversion price. So watch out for Infibeam. You also have Punj Lloyd, where the company has approved restructuring plan. They will issue shares and bonds to certain lenders and promoters. So stock will also react to earnings that came out post-market yesterday. So that's another stock to track. You have Reliance Communications, which will be in focus as well. There's an ET report which said that ATC has taken the company and its arm to a high court to recover 101 crores from Arcom. You have Idea Cellular. Some more details coming in after the board approval for a QIP came in during market hours yesterday. Bloomberg has a term sheet, and which says that Idea is looking to raise $400 million in a QIP, and they have an option to boost the deal size to $456 million. In fact, they've said that the shares will be offered at 82.5 to 84.8 each. So that's the news coming in on Idea Cellular. And lastly, we are also tracking Safari Industries, where on a bulk deal yesterday, Malabar India Fund bought 2.6% stake, and then you also had Ronnie Screwwala, who bought 1.3% stake at 520. That stock was down 4.5% yesterday. So let's see how that reacts today. But those are some of the stocks that you need to track.
So weak earnings from Sun Pharma. It was the final Nifty company, and there were two reasons. First of all, Taro weighed down on the earnings, and secondly, there was this additional 513 crore tax outgo because of the new US norms that came out. Overall, top line, EBITDA and bottom line were below what the Bloomberg consensus estimates were. Now, if you're looking at the geographical breakup, clearly the India markets didn't grow as much as anticipated. It grew just 6%. US markets were down 35%. Rest of the world and Europe grew anywhere between, emerging markets and rest of the world grew anywhere between 6 to 10%. Now, what did the management say in the conference call? That is very, very important. They have said that they've guided for a marginal miss on the revenues on FY18, which means from a single-digit degrowth that they expected, it will be close to a 14% decline at this point of time. They see the fourth quarter revenues to be similar as far as the last quarter is concerned, as far as the third quarter is concerned, and they've maintained EBITDA margins guidance at 20 to 22% for the second half. They're saying that they're looking at cost rationalization measures which will help the company with improving margins, but they did not comment anything on Halol at this point of time. Finally, what they're saying is R&D is running much below the guidance of 9 to 10% of the revenues. So weak numbers and weak commentary coming in from Sun Pharma.
This is essentially the modus operandi of how exactly these transactions went through. The first part of the transaction involves these borrowers who are Nirav Modi and some associated parties, them going to the Brady House branch in Mumbai of Punjab National Bank and seeking a letter of undertaking. The letter of undertaking is essentially a promise that Punjab National Bank gives to some of the foreign lenders, saying that this is a good borrower. In case this borrower defaults, we will pay you back. Once they've received that LOU, the foreign bank will approve buyer's credit. This is essentially the money that a company takes so that they can buy raw materials and then start creating their product. So once they have approved that buyer's credit, the amount gets credited to the PNB Nostro account. So remember, the money does not actually reach any of these borrowers. It essentially remains in this Nostro account and then gets paid out to the supplier, whoever is supplying these raw materials to the company. And then once the supplier gets it and the raw materials are transferred, the person who's borrowing all this money will finish their product. They will export these products. They will get whatever their receivables are from these exports, and then they will pay back the foreign bankers. Essentially, the difference is that you get money from a foreign banker, then you pay them back using the export receivables, and then you clear the transaction. The problem here is, and the whole fraud here is, that when they receive these LOUs, they did not have necessary documents or necessary sanction of credit. What has come out of the FIR is that the companies tried to get these loans but did not have any sanction limit from the bank. Neither did they have any kind of deposit or long-standing relationship with the bank, which are both required whenever they want to get any LOUs.
According to Banking Secretary Mr. Rajiv Kumar, the PNB case dates back to 2011, where two fraud letter of undertakings were issued by the PNB branch manager in Mumbai, and these cases relate to Nirav Modi and the Gitanjali Gems case. This, according to Banking Secretary Mr. Rajiv Kumar, is a part of cleanup exercise undertaken by Punjab National Bank, and the case is currently with CBI, and about 10 Punjab National Bank officials have been suspended. According to Rajiv Kumar, the government would do whatever it takes to clean up banks and will not tolerate any fraudulent activities. He added that this is essentially a step towards rewarding the honest and putting an end to fraudulent activities.
Some of the other stocks that you need to keep on your radar today, starting off with Punjab National Bank, arguably the stock of the day yesterday. It was down nearly 10% and saw delivery selling of more than 200 crores. The delivery volume shot up 181% at nearly 1.5 crore shares as compared to its 5-day average, and the total volume surged 160% at nearly 7.5 crore shares as compared to its 5-day average. Canara Bank, the other stock to watch out for, it was down nearly 6% and saw delivery selling of 60 crores. The delivery volume was up 140% at 19 lakh shares as compared to its 5-day average, and the total volume surged just about 50% at nearly 61 lakh shares as compared to its 5-day average. Last and final stock to watch out for, NCC. Some bit of trading activity seen over here. It was up 6.5% and saw delivery value of nearly 80 crores. The delivery volume was up 130% at 63 lakh shares as compared to its 5-day average, and the total volume shot up more than 3 times at about 3.1 crore shares as compared to its 5-day average.
So it's a big news for MT Educare. They're bringing a new promoter that is a listed entity called Zealand, and also they will be raising capital worth 200 crore rupees. Now Zealand, MT Educare will be issuing fresh shares to Zealand. Now they will be issuing 31.96 million shares at 62.57 rupees per share. Now in this way, MT Care will raise around 200 crore rupees, and post this capital infusion, Zealand will own around 44% stake, 44.5% stake in MT Educare, and the current promoter of MT Care, that is Mahesh Raghu Shetty, his shareholding in the company will come down to 23.7% from 43% which he used to own currently. Post this cap fundraising of around 200 crore rupees, Zealand will also have to make an open offer, as its holding in MT Educare will increase from it will be more than 25%. Now this open offer, he has to make an open offer of 26% equity. Now he will be making an open offer of around 1.86 million equity shares, that is a 26% stake, and this open offer will be made at a price of around 72.76 rupees per share. So the big news is that MT Educare is raising 200 crore rupees of capital, and because of that it will have to make an open offer of another 1.86 million shares at around 72.76 rupees per share.
Indians are not known to be big cheese eaters. The cheese market makes up just 1% of India's market, but it's the second fastest growing segment in the industry as a whole. As more Indians shift to a protein-heavy diet, the cheese segment is clocking an annualized growth rate of 13%. Not surprisingly, India's largest dairy player, Amul, has taken notice and decided to cash in. Amul is looking to double its capacity over the next 2 years as consumption habits of the Indian consumer change.
Right now, we are expanding maximum capacity. One is in cheese. Last 2 years, we have trebled our 3 times capacity, and next 2 years again we are doubling.
Okay.
So you can say that within 5 years, our capacity in cheese will multiply by 6 times.
Parag Milk Food, which holds a 32% market share, too has seen the demand pick up from hotels, restaurant and retail stores. The company has already increased its cheese processing capacity from 40 to 60 tons a day, and that could very well go higher given the robust demand. The Indian cheese market is expected to reach 3,500 crore by the end of 2018, and with demand only going one way.
With Indian food getting cheesier remixes everywhere, dairy companies are looking on tapping on this increasing cheese demand. So does that mean that there will be more cheese balls? This is Charlene D'Souza for Bloomberg Quint.
On the big brokerage calls for the day, first we have is Antique on Strides session. Now they have initiated coverage on the stock with a buy rating and a target price of 970. Now they're expecting industry-leading growth trajectory from Strides in the next 5 years on the back of investment done by the company in the last 3 years. Now Strides is in a good position according to the brokerage to extract operating leverage, which will also be complemented by reduction in its leverage. Now they're expecting the company's revenue to grow at a compounded annual growth rate of 20% over FY 18 to 20, and they're expecting the EBITDA margins to expand by 560 basis points to 19.8% by FY 20. Now, according to the brokerage, the Australia business has multiple growth levers going forward, and the US business is at a turnaround point and is a prudent medium-term strategy. Now, Strides is divesting its commodity API business, and this divestment will not only make the company leaner but also more efficient. Now, they're expecting the net debt to EBITDA to come down to 1.2 times from current 2.9 times. Also, with the leverage position, it is expecting improvement in the return on equity. It is expecting the return on equity to expand to 14% by FY 20. Second, we have is brokerages on Nestle. Now, Goldman Sachs has maintained its sell rating on the stock, but have raised the target price to 5,614 from 5,485. Now, the fourth quarter 2017 results, the revenue and EBITDA were above estimates, and the domestic sales growth was driven mainly by higher sales volume growth and realization. Now, the gross margins were ahead of estimates, driven by better product mix. Now, Credit Suisse has maintained its outperform rating, but have raised the target price to 9,000 from 8,700. Now, according to the brokerage, the massive earnings bid in the fourth quarter of calendar year 2017 reaffirms their view that the turnaround is gathering momentum. Now, the revenue growth was driven by volume growth and was the fastest growth among peers. Now, also, its input cost is coming down like milk, sugar, and white flour, and along with that, the GST rate cuts will add tailwinds to the margins in calendar year 2018.
Well, you'll find all the live market action over the course of the day right here on Bloomberg Quint Live, but there are also several stories that you should consider reading on the website. That's bloombergquint.com. Here are a couple. First up, Credit Suisse believes that the Reserve Bank of India's revamp of bad loan resolution framework could increase the bad loans under insolvency resolution by another 40% in 6 months to about 5 lakh crore. That's more than half of the non-performing assets in the Indian banking system. India's wind tariffs stayed close to their record low in the latest auction by the Solar Energy Corporation of India. That's according to 3 people who told Bloomberg Quint this on the condition of anonymity. Well, that's all we have for you on this edition of All You Need to Know. Up next is Indian Open, and that will take you through Market Open. Do stay tuned. Thanks for watching. This is Bloomberg Quint.